Is Lululemon stock, LULU, a buy? Lululemon has actually has some impressive numbers when you break it down. They've got a lot of pricing power, and their revenue continues to impress. They've got some great figures. I wanted to break down Lululemon. This is actually one of the first times I've kind of looked at Lululemon themselves. And when I compare all my numbers and I use the same metrics, Lululemon is actually a fairly surprising company for a premium retail. The only asterisk I have right now is the economy moving forward. Now, anybody that's followed my content for any period of time, first, I always look at the economy. Then I ask the question, how will this company operate, function within this economy? And while Lululemon stock, LULU, continues to move higher and higher, it has struggled as of late, rebounded since its latest earnings. Now it's a question of, will LULU stock head higher? Let's jump in. I'll break things down, starting with the economy, then Lululemon stock. Here we're looking at the 4-hour bar chart. As you can see, in December and all the way back in late August, when Lululemon released their earnings, we saw a pretty decent move back upward in August, late August. Now in December, we saw a big shoot higher. So looking at the 4-hour bar chart on Lululemon stock, you'd be fairly impressed. But then when we move forward to the bigger sort of picture, going back about a year and a half, all the way back to 2022, almost 2 years, Lululemon stock has not regained its sort of big peaks higher. Now, there was a lot of speculation going into 23, into 24. The economy itself was moving quite rapidly. Then the Federal Reserve had to step in, and this affected Lululemon stock. They missed a few numbers, and there was a big sell-off, as you can see, moving from about well over 500, 520, all the way down to almost 230. That's a huge move lower. So what happens next for Lulu stock? Again, I focus everything first on the economy. Now, the economy itself is very robust. We have very strong jobs. We just printed another 256 jobs at the beginning of this month. I think it was the 10th of January. That job growth is going to translate into consumers spending more. Not a bad thing for a company like Lululemon. Lulu stock should continue to move higher based on future revenue with consumption from consumers. But the problem is we're also seeing price pressures. Now there's a lot of a very, we'll call it an interesting political spectrum right now. Probably going to see price pressures in food, as a lot of the individuals who work farms and such left. The Federal Reserve may have to step in. Now, going all through 2024, in 2023 itself, I kept saying all through 2023, you can check my videos from before, I said Federal Reserve should not be lowering interest rates all through 2024, not until 2025. They lowered interest rates. Now, all of a sudden, they're looking at it saying, well, we're definitely not going to lower anything anymore. Beyond that, what will the Federal Reserve do? More likely, and a lot of analysts are starting to get on board with this, move interest rates back up. Again, the Federal Reserve should not have moved interest rates. They did so in September and all throughout the end of the year, and I think they kind of nudged the economy a little bit, kind of trying to help someone try and become president. That didn't work, though, and now we have to pay that price. So given an atmosphere like that, where the Federal Reserve might have to raise interest rates to constrain growth, this will affect job growth, which would affect personal incomes and personal consumption, Lululemon. So looking forward, I think we're going to have a very tumultuous year when it comes to the economy. And because of that, I think we're going to have a tumultuous year with the stock market. Lululemon themselves, and I've got the numbers that are going to be showing up here in just a second, some bar charts for you to look at, are probably going to do modest but likely miss their numbers. Not their fault. It is going to be the economy. The stock market itself is very likely to kind of waver and sell off based on what the Federal Reserve might have to do. Lululemon will do as well. LULU stock would be a sell in an environment like that. Here's how Lululemon performed versus QQQ, which is the ETF for the NASDAQ. There's about 101 holdings within NASDAQ, the QQQ ETF. And now QQQ ETF today, when I put this together, sold off sharply because of NVIDIA. This didn't affect Lululemon stock as well simultaneously, but you can see that Lululemon has a chance of sort of catching up. But over the past 2 years, Lululemon stock itself has not really performed outstanding, only up about 20%, going all the way back to 2022. Here's a look at Lululemon quarterly revenue, 2.4 versus same quarter last year, 2.2. So increasing revenue, which is always a plus for me. And if you look at these numbers, if you kind of compare them one quarter to the year before, you can see that continually Lululemon does increase their revenue. As a value investor, this is such a key element. The next thing we have is net margins. Net margins are a little soft on Lululemon. When you compare, say, all the holdings within the NASDAQ 100, which would be, I think, 17.5%. We're still waiting on 2024 to see what the annual rate is for net margins for the NASDAQ 100. But the NASDAQ 100 holds some companies that have net margins that are like 30%. So at 14.7%, I thought that was actually pretty impressive for Lululemon. Their net margins are actually pretty strong. So every dollar they bring in, they keep 14.7 cents. Earnings per share, 287. Again, another factor we're looking at is increasing. However, Q2 2024, which really kind of started moving Lulu stock higher, was much bigger. SG&A was a cost that increased that earnings analysts kind of looked at and said, well, that's a little concerning, but let's take a look at projections. Price earning ratio, 39.2, a little rich. Plain and simple. The price earnings ratio right now for the broad stock market is about 30. So this is a little on the rich side. Projected revenue for 2025 going into 2026 and 2027, we see continually increasing revenue, which for a value investment, that's such a strong thing. Projected earnings per share, 24, 25, and 26. You can see the expectations are that Lululemon continues to increase their top line and bottom line, which would push Lulu stock higher. But again, Lululemon, looking at the numbers I'm looking at, a little overvalued, a little on the rich side. At the same time, the economy. So I don't think they actually hit their projected revenue, and I don't think they hit their projected earnings per share. Breaking everything down, Treasury yield right now, the U.S. 10-year Treasury yield is about 4.65%. The 2025 earnings per share projection for Lululemon is about $15.04. You do your math on that, and that gives you, with a stock price of about 404 for Lulu stock, the yield on Lulu is about 3.719%. So you ask yourself a question. All right, so the 10-year Treasury yield is your benchmark. That's your measuring stick. You ask the question, okay, if I'm going to get involved in a stock, this is what I compare it to. Now, the U.S. 10-year Treasury, very likely, actually the yield might go a little higher. So you could effectively hold off on buying the U.S. 10-year Treasury should we start to see continually increasing price pressures. Maybe you get 4.75, maybe 4.85, maybe up to 5. But I don't think we go too much further beyond that. If you bought in U.S. Treasuries and the Federal Reserve did have to shrink the economy, stocks would fall. Eventually, the Federal Reserve would flip and lower interest rates, and now all of a sudden you're holding on to Treasury yields that are yielding 4.65%, 4.75%, whatever you get your hands on at that particular time. So the price is going to go up because interest rates in general are lower. So you're holding on to something that potentially could increase in price while at the same time pulling out a yield of 4.65%. The downside risk, you're looking at Lulu stock, which is overvalued. It's a bit rich. looking at price to earnings ratio, and also looking at future yield. Because of that, your downside risk of buying into Lulu stock is a bit elevated. We'll just call it that. I think Lulu stock, I like their metrics, but I think they're overpriced. And I think they're going to correct for two reasons. Number one, they're overpriced. Number two, the economy. Moving forward, this is not an economy to be buying a stock that, although they are growing, the growth prospects might be contained with an economy that we're looking at. Buy on the dip, probably a year, year and a half to 2.5 years. If you want my written content on this to break down some of these stocks that I analyze, how I analyze the economy itself, make sure to hit the links at the end of the video and down in the description where I have my Substack. You can link over to that and become a subscriber to my Substack. Help support the content I put out as well. Make sure to hit the like and follow button, and we'll see you in the next video.